All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video, taking a look at my setup, okay? I've been working with traders now for quite a few years. I've helped them along their journey of day trading, swing trading, stocks, futures, Forex, options, software, one-on-one coaching. I mean, really a wide spread of how I've helped people along their way overcome their hurdles, psychology aspects, and I've really been able to just help them through my own failures and my own experiences, right? I'm at this now 12 years, going on 13 this year, actually. And, I am genuinely focused on a couple things, right? Like every year, you should be setting new goals. When you're a business, like that's at the end of the year, you should be recapping what you've done the previous year and setting expectations for what you're going to do in the upcoming year. So, my goal this year was to scale my position size. That was my goal, right? Like I've gotten very comfortable with my trade plan, very refined, very exact. If I don't get what I want, I'm disciplined enough to stay out of the market. Now, with that being said, the market hasn't presented a bunch of really great opportunities, at least not while I've been sitting at the computer. Have I grabbed some ticks along the way utilizing other trade plans that I have? Yes, but those other trade plans are designed to really kind of take a more aggressive role. It's something I only implement when the market's not giving me ultimately what I want. I've gone now, we're 2 weeks into the new year and haven't seen a trade that really got me excited to. I shouldn't even say get me excited. It hasn't checked all my boxes. So like I haven't taken any of my trades that I'm looking to get into and hold and so on and so forth. So, and that happens, right? Like we can't control the market. Like we are who we are and the market is what it is. And, it's our opportunity to partake in the market, but none of us are going to force it to do what we want to do. But I want to just kind of show you what my setup is, right? Like this is what I've refined. This is what I give my clients. We're looking at a couple time frames here. We're using a couple different VWAPs. We're using a couple different fast moving averages, using a modified MACD set to the way I want it to do what I want it to do, using, volume based, printing volume bars, really kind of refined all of this into what I want it to do, specifically for my personal trade plan. And in doing that, that's where we get the opportunity to find trades that look like this one. And I just really wanted to kind of break it down, without getting into all the nitty gritty. But light sweet crude oil, one of my preferred markets to trade. You can see quite a bit of consolidation here, but ultimately we break above this prior high that we've been kind of fighting here for a while, right? Now, I don't buy the break of a prior high or prior low. I just don't, because I have a very particular setup, right? My first objective in an uptrend is now to find support. And if I'm able to find support where the buyers pushed higher, the sellers stepped in, the buyers rejected them, that's support, right? In an uptrend, that's support. So I draw a line. Now, around this line, I'm looking to do one of two things. Either identify consolidation, which that needs to be broken and then ultimately needs to now be new or future support, or take a very kind of shallow correction, right? Like for me, a correction doesn't look like this. Like that's not a correction. Like I want a couple candles, kind of the shallower the better, in all honesty. Sometimes it's a little steeper, sometimes it's a little tighter. Every time this setup transpires, it's going to look different, right? That's what makes it hard. Like you have to be able to put it together in your mind, identify it, qualify it, execute it. I say that all the time. And then you need to employ a method of paying and protecting yourself so that you can maximize the trade opportunity. So the biggest thing I tell my traders that they need to look at first is the risk reward potential. When you're trading inside of prior price action, there's a better than not chance that you're going to encounter a prior high, a prior low, some area of prior price action that's been previously rejected by the opposition of the way you're trying to trade. And in doing that, it really does complicate, trying to trade non-trending markets, right? Like markets only trend about 20 to 30% of the time, and then you take that into account of how often you're sitting at your computer. You should really be out of the market about 90% of the time, or have a very proficient way of getting in and out of the market quickly to capture short-term gains. But my setup looks like this. Look at the risk reward, okay? Risking 12 ticks. Looking at my next technical resistance, 71 ticks. That's a 5.92 to 1 risk-reward ratio, almost a 6 to 1 risk-reward ratio. Now, my trade plan doesn't require it to be this big, but it certainly doesn't require it to be, look something like this, where I'm gonna risk 12 to try to make 9. It certainly doesn't look like that. Trust me. So you need to decide what your risk reward tolerance is. Everybody should have it. Okay, that risk reward tolerance is an extraordinarily important aspect of any trade plan. I tell people all the time, you can't risk $500 to make $300. You will go broke. I promise you. Okay, take my word for it. Don't take my word for it. That's totally up to you. But the fact of the matter is, if you cannot take greater risks than the calculated potential reward, it must be a multiple. Not 1 to 1. You better be extraordinarily proficient if you're taking 2 to 1. A minimum should be 3 to 1. And for a new trader, you should be looking for at least, a 3, 4, 5 to 1. Because you're gonna, as a new trader, you're gonna fuck it up. You're gonna get it wrong more often than not. Because most of the time you're not going to be disciplined to wait. You see, I drop a vertical line here. This very thin dotted line. It allows me to look from the bottom of my chart straight through everything that's plotted on my chart and identify everything that I must see to have consideration before I even execute based on the price action, right? Like I got to find the price action that I'm looking for first, and then I need this entire lineup here to be in sync. And if it's not, I won't take the trade. If it is, and it looks like this, I would take the trade, right? I told you, like my goal for this year is scaling into larger position sizes. So here it is. All right. Now this happened at 5:06 a.m. Eastern Standard Time, New York City time. I wasn't at the computer. Okay. So I didn't take this trade. Would I have? Yes. Did I? No. Right? Not going to sit here and sell you some fantasy. Fact of the matter is, the market gave me exactly what I wanted 3 hours before I was ready to be present to take it. Shit happens, guys. Right? Like that's part of the deal. When you're a day trader, you get paid to wait. And if you don't wait, you will lose money. And if you lose money when the opportunity does come around to get paid, you're going to now be trying to fight back getting to even rather than putting that money and profit in your brokerage account. You can choose whichever battle you desire. I'm not telling you that my trade plan's right for you. But what I am telling you is that my trade plan works over time. But it does require a great amount of consistency and discipline to employ it. You need to figure out what is for you. And you need to employ it with a great amount of consistency and discipline. So I hope this video was informational. I hope you learned something. If you'd like to learn some more about what I do, what I offer, how I could be of service to you, there's some links below the video. I encourage you also to like, subscribe to the YouTube channel, follow whatever it is that YouTube does, and I will see you in the next video. God bless, guys, and enjoy your day.